Hello, everyone. We are live on the web, continuing our special series, Tax Secrets Revealed. Joining me are a panel of financial experts, Wilma Hayes of H&R Block, Carolyn Bigda from Money Magazine, and CPA Sydney Kess. Welcome to all of you. Thanks for sticking around. Remember that you can still send us your questions. You can go to our email address, which is earlyshow.cbsnews.com, or I'm on Twitter right now. I've got it up here on my laptop, so you can tweet me, I guess is how you put it, twitter.com/earlyshowmaggie. And I'm going to be checking in. We're going to get to as many as we can. We already have a bunch that have come in, so let's start with these. Okay. Carolyn, let me begin with you. This is a question from our viewer, Tommy. He wants to know, can you deduct losses on your 401k if you did not cash it in? Well, everybody has seen their 401k drop. Can you deduct those losses?
Yes, a lot of people have seen losses, and this is a point of confusion because the IRS treats tax-deferred accounts a little different. So you can't deduct those losses in your 401k. But if you sold a stock, a bond, or a mutual fund in a taxable brokerage account in 2008 and you sold them for less than what you bought them for, then you do have losses that you can deduct. Okay. You can use those losses to offset gains elsewhere in your portfolio if you had them. And if you have no gains, then you can offset up to $3,000 in ordinary income. Okay,
so just because your 401k went down does not mean you can deduct those losses. You had to have sold stock to do it, right?
You had to have sold stocks in a taxable account, not in a 401k. Yeah.
Got it. All right, Sydney, this is a question from Jan in Georgia. We have been helping out our adult daughter financially for the 2008 tax year. She lives in New York City, where it is very expensive to live. Are we eligible for any kind of tax deduction since this is not a loan?
Maggie, unfortunately, you're not. It's a personal expense that you're really paying. For example, if you paid the interest on your daughter's condo or co-op, it's not your liability, it's the child's liability, and you cannot get that deduction.
There's no way around it?
No way around it.
Can they do it as a loan instead somehow?
Well, even as a loan, it's probably an interest-free type of loan, and you're not going to get any break on it.
Sorry, Jan. Okay, let's go to the next question. It's for Wilma from Eileen in Missouri. My mom won a car in a promotion at a casino. Instead of the car, she took a cash check of $40,000, but was given a 1099 for $62,000, which is the value of the car. Right. My question is, where do we enter the $22,000 difference / loss? Do we enter it as a loss at the same place as you would enter a gambling loss on Schedule A?
You don't.
Do not.
You don't. What's happened here is that they've misissued a 1099. They need to go back to whomever they issued the 1099 and get the correct amount for the $40,000. She never received that $62,000. The 1099 needs to be corrected.
So that's a mistake. So where should she go?
Whoever issued the 1099, she needs to go back and get it corrected and get a new one issued for $40,000.
She'll probably need to file for an extension.
Yes.
It'll probably take a while. All right, Eileen, you know what you have to do. Question for Carolyn from Maria here in New York. How do you get the stimulus money if you are laid off from your job in 2009? Does it come in your unemployment check?
It does not come in your unemployment check. What happens is when you go to file your tax return next year, there's a line on the return and you can claim it there. And the good thing is that unfortunately, if you do lose your job, that may help you qualify for the credit because there are income limits. If you're single and you make more than $75,000, then the credit starts to phase out. And if you're married and file it jointly, that credit phases out once you start making more than $150,000. So there is a bright side, a little bright side
tiny
to losing.
Silver lining.
Yeah.
Okay, thank you very much. Let's see. The next question I have is for Sydney from Marissa. She's in Texas, and she wants to know, what are the advantages of filing taxes separately as to filing a joint return when you are married?
Well, what type of relationship do you have if you're married? Is the husband cheating on his taxes? You may not want a liability, and when you sign your name on that return, it's a joint and
okay, assuming everything's on the up and up.
Assuming everything is on the up and up, there are certain limits on the return. For example, on casualty losses, on medical expenses, and sometimes filing separately, you have lower adjusted gross income figures, and in some instances, there are tax advantages. So in many cases, it may be desirable to file, work up the taxes filing the returns separately as compared to jointly.
Oh.
And in some instances, you may be ahead.
So you should probably talk to a CPA about that, right?
Yes.
Figure it out. Okay, let's go to Wilma. This is Ugo in Tennessee.
Okay.
As the head of household with no dependent, do I give myself tax credit of $3,500? I make $13,000 a year.
Okay, my concern there is, how is he qualifying himself as head of household? He's saying no dependent. For tax purposes, to qualify as head of household, he'd have to have a dependent.
Oh.
All right.
Okay.
And he would get an exemption of $3,500. The federal government is allowing $3,500 per person.
If he has a dependent.
He has to qualify himself as head of household for tax purposes and have a dependent. The way this is reading, I'm under the impression he's assuming he's head of household just because he handles all the expenses in the house and operation. But he's not head of household for tax purposes because he has no dependent. Right. But he still will get the $3,500 exemption.
Even though he doesn't have a dependent?
He'll get a $3,500 exemption for himself.
Oh, okay.
But not for a dependent.
Okay, yeah.
It's a personal exemption.
It's a personal exemption. Okay, so he will get that. All right, Ugo, hope that helps. Carolyn, Pat in South Carolina wants to know, I keep hearing that people on Social Security will receive a $250 per person stimulus check in May. My husband passed away on January 22nd of this year. Will we get these checks, and will I get one for my husband?
These checks, the $250, is in lieu of the making work pay credit. And so it is for $250. And she should get the check, and we think she should get the check also for her husband because he passed away just this year. So she should
get
look
both.
out for it. But she can consult her accountant to make sure.
Okay. Sydney, we have one for you from Kathy in Florida. She writes, I am on total disability SSI and I am unable to work. Therefore, I do not get a paycheck for the benefit of the stimulus check benefit as explained to you by you this morning. Her question is, this morning, people with paychecks will benefit from it, will be available to me, or will it be extra included into my Social Security check? Help me make sense of that. I'm not understanding this.
If you're getting SSI or Social Security, what you should bear in mind is you would not be eligible for the making work credit. So what they have done is they're giving an opportunity to get another $250 credit.
Okay.
And what happens is if you're getting the SSI, you do nothing. And Social Security will send you a check, they hope by May 1st. And that check... You
do nothing. You just wait for that check.
You do nothing, and what they will do is they'll send the check to you if you normally get your SSI by check.
Okay.
If it's a direct deposit in your bank account, it'll be sent directly to your bank account.
Okay. Thank you. All right, let's check in with our producer, Eric Salzman, who's here taking emails. Hi.
Hey, Maggie, what's going on? Well, we have a question from Patrick, who's in the military. He says, I was in the Army for 12 years. I got a medical discharge and received a severance pay. This made my income look really high. When I went to go file, most of what I was paid into taxes was kept. I have a wife and 2 kids. How can I get more of my money back? He wants to know.
Who wants to tackle that one? No takers?
He's in the military.
Do you want to repeat the question?
Yes, please.
Okay, repeat it, please, Eric.
He's in the Army for 12 years, and he got a medical discharge. Because of his severance pay, his income looked really high.
So
he wants to know if there's any way to get some money back from his income, because it sounds like his income was disproportionately high, appeared disproportionately high this year because of the severance pay.
Well, you don't have income averaging anymore. That's out. So I don't think you're helped. Because you got a larger amount in 1 year. And assuming that's all income, you'd have to pick it up.
All right.
He also needs to check and see, was he in a combat zone? I mean, he was injured. It would make a difference. Some of his income may be excused from being taxed because he was in a combat zone.
Okay.
There is a government publication.
Income. The severance is considered income.
Yes.
Yes, severance is considered income.
All right. All right.
So there is a government publication treating the military payments, and I think I would double-check that government pub on the various rules for veterans.
I'm just curious, what is the most common complaint or source of confusion that you find with your clients, with people doing their taxes?
Not keeping accurate records. All right, if they don't keep accurate records and make clear the source of the record, what the expense was for, they have a tendency not to be able to explain to you why they want to take the exemption. They come up with their own reasoning. All right, maybe a lot of times outside of the tax law.
Yeah,
right.
We want to somehow make it work. We all do that. What do you find, Carolyn?
We find that a lot of people get confused about tax credits because they change from year to year. Congress has a tendency to extend them, or they often have expiration dates, and so people aren't sure from year to year whether or not they can claim the same credits that they claimed last year.
And Sydney?
Also, the continuous changes.
I know, it's hard to keep track.
Every year there are so many changes that even the experts are not up on the latest developments. For example, just recently there was a change in the rule that was enacted on December 23rd dealing with minimum distributions. You're 70 and a half, and you have a pension plan, an IRA, right? For when you have to make a minimum distribution. Starting in 2009, you don't have to make that distribution.
What does that mean?
That when you're 70 and a half, you have to pay out part of your IRA or your 401k over a period of your expected life expectancy. But because the market has been so difficult, Congress enacted a provision on December 23rd saying that they're going to allow you not to make your distribution in the year 2009. Okay. So I saw tax experts who were not even aware that the rule changed.
I bet.
It sneaked in on December 23rd.
Wow. Okay, let's check back with Eric. You have another one?
Catherine in North Carolina wants to follow up on something that was said earlier, during the broadcast, in fact. She says, one of your tax experts mentioned that you do not have to file if your income for the year was less than $8,950. She wants to know, is that still the case with an at-home daycare where I made about $5,000? I heard the limit was lower for home daycares, and she has 2 dependents.
Well, the filing requirements, you take your standard deduction that you're entitled to, plus your exemption amounts. So the standard deduction, if you're a single person, is what for 2009? 2008.
It's $5,450.
$5,450, and the $2,350.
Exactly.
Okay.
$230. That's an additional $7.
What do you guys think is the most exciting thing that's happened this year? What's different this year that people should really be aware of? If you had to name one thing.
Because of the high level of foreclosures.
Yeah.
All right. People can, if they go into foreclosure and they're forgiven a certain portion of the mortgage principal, they can be forgiven up to $2 million of mortgage principal in terms of being taxed on it. And I think that takes a lot of worry and pressure off people.
Absolutely.
Mm-hmm.
There's also, related to housing, the first-time home buyer credit this year. It was put in place, I think, for people who bought homes starting April 9th of 2008, and it's going to be extended through most of 2009. And in 2008, the credit was $7,500, and in 2009, I believe it's increased to $8,000. And you also now don't have to pay it back. Originally, when Congress passed the law, they said over a 15-year period, you're going to have to pay that credit back to the IRS. And in 2009, they waived that requirement. Okay. So that's some help for people who are looking to buy a home today.
Last word, Sydney?
I think that the whole change of tone in the legislation this past February, when the stimulus bill was passed, I think for the first time, we've had a re-emphasis of helping the lower income or middle income taxpayer. And I don't think people realize the enormity of this change. I spoke earlier about unemployment insurance, and I told you that the first $2,400 of your unemployment insurance is not taxable. Now, what you should bear in mind is, in prior years, all of your unemployment insurance was taxable since the early 80s. But not only have they changed the rule on unemployment insurance as far as the taxability for the first $2,400, They raise the amount of unemployment insurance you get another $25. The number of months you're eligible for unemployment insurance. And finally, you should bear in mind, if you lose a job, one of the big things that people have concerned about is the health coverage. And with health coverage, you were eligible for COBRA under the old rules. But it cost you so damn much to take it, you couldn't afford it when you're out of work. So what they've done is the government is paying 65% of that coverage.
All right. Sydney, Carolyn, Wilma, thank you so much. Wow. Thank you all for your questions as well. Keep them coming because we're going to keep up these webcasts as we proceed here till tax day, which is just around the corner. And of course, tune in tomorrow to The Early Show on CBS, where we will have more. Thanks for watching. Bye-bye.